many are saying it's an M&A, well, digestion risk that maybe is being faced here. You put $25 billion offer into CyberArk, now another M&A piece. Why does it work for you?
Well, Caroline, nice to see you. This is our 28th acquisition in about 7.5 years. And we've demonstrated to the market that we have been able to establish our business in adjacent markets over the last 7 years by paying attention to the market, looking at where the puck is going, understanding what is important for our customers. And I think Chronosphere, which is our latest acquisition, fits right bang smack in the middle of where the market's going. If you look at what you guys were talking about before this, you're talking about NVIDIA, AMD. Eventually, all this compute power is going to result in people building faster and more relevant applications to the end consumer or enterprises. All those applications have to be observed and make sure they don't have problems or go down. And that's what Chronosphere does. It observes applications and infrastructure and makes sure you have 99.9% uptime. And then we are going to combine that with our agentic capabilities to make sure agents will go fix that if they go down. So I think it's a phenomenal opportunity going forward. And it's fine. The stock will recover. I think investors are beginning to understand the story. It's all right.
I mean, RBC has an outperform, price target 250, well above where you are. And they're saying, look, you're a top-tier software vendor seeing AI tailwinds as it grows ahead of industry peers. But how does observability take you into a whole new ecosystem? Look, you're now fighting Datadog, Dynatrace. Why is that the right total addressable market for you as well as security?
Look, observability is a space, as I said, as we get more and more AI deployed, we're going to need more and more real-time capability. Real-time capability in actions, real-time capability in applications. Real-time capabilities require 99.99% availability, which means you have to make sure your infrastructure is always up and running. If it has a problem, you should be able to fix it right away. Sort of similar to security. We also have to watch security on a constant basis, make sure if something happens, we fix it right away. So actually, over the last 10 or 15 years, if you look, there are companies that have tried to play in both spaces. And typically, they've ended up really well on one side, not the other. We've not made a foray into observability because we never thought we could build it organically. We don't have the skill set. But we went out looking for data pipelining. We found Chronosphere. Chronosphere has some of the best engineers in the space. Observability suffers from two problems. One, it's too expensive. And two, it doesn't scale well. Well, Chronosphere solved that problem. It is 2.5 times cheaper than anybody else on the market. And two, it could scale to gigawatt size in terms of what is needed from an AI perspective. So we think the time's right, the asset is right, and the opportunity is right.
Taken in aggregate, that is an astonishing amount of M&A. Is there any reason why you can't just keep going and keep using M&A as the tool to position the platform where you want it, Nikesh?
Look, in the last 7.5 years, I'd say 30% of our opportunity has been created by strategic and timely M&A. 70% of our opportunity has been on organic innovation as a company. Now, that's worked out really well for us. Even now, we've announced two big deals, CyberArk and Chronosphere. Collectively, we're going to spend slightly under $30 billion. But that gave us the confidence to increase our targets for ARR in FY30 by $5 billion. If I can go spend $30 billion and buy $5 billion of ARR 5 years from now, I do that every day.
Let's go back to the fundamentals of where you are already. RPO, in particular, remaining performance obligation growth. It was strong in the quarter just announced, but when you're pushing out to fiscal 2026, our own intelligence analysts just a little bit worried about the slowdown in growth. Are you worried about it?
You know, when I started 7.5 years ago, we were a $2 billion company. Well, our RPO right now is $15.5 billion. We set a target of $20 billion in ARR. Those are big numbers. So I think part of what people fail to understand is absolute numbers get bigger and bigger. On the margin, growth rates change. But I think from a capability perspective, if we start doing $20 billion in ARR, we'll be generating $10 or $15 billion of free cash flow a year. That's a far cry from where we started at a few $100 million 7 years ago. So I think you have to look at it from a slightly multi-year perspective. From that perspective, we think we're well positioned. We think this is going to be the largest cybersecurity company in the world. And we have aspirations to take it and double or triple it from where we are.
Right now, any given technology company might use a dozen, several dozen different tools across cyber and AI, right? And your pitch is you just put everything in one place, you know, offer a suite of things in one place. Is that strategy working to convince software companies in particular that it's better to come to Palo Alto Networks than do business with a handful of different players?
Yes, of course, it is working. We call that platformization at Palo Alto. We continue to add 50 to 75 customers every quarter, and sometimes more in about the fourth quarter. But I think more importantly, if you look at the evolution of technology, almost every industry vertical in technology has started that way from the application perspective. People had 15 or 20 different vendors that did the entire solutioning for CRM. Today, we see single vendors, platforms in CRM. Same thing in HR. When I used to work in programming 25 years ago, we used to have multiple applications that solved the problem. Today, there's one platform. Same thing in ITSM. I think the same thing is coming to cybersecurity. Cybersecurity is a 20-year-old industry. It usually takes 30, 35 years to build that platform capability in industries and make them become ubiquitous. So I think we're at the right place, right time. We are seeing that move towards platformization. If you look at what happened most recently, a few weeks ago, there was an attack using an AI LLM. That means
Right.
AI was used by bad actors to go and attack customers, and they were able to do it in real time. You have to have real-time capability on your side to defend yourself. The only way to deliver real-time capability on your side is to not have a mess of 40 or 50 products. The idea is to have them all be consolidated, running on a singular data layer and building agents that go and defend you, just the way bad actors are using agents to come attack you.
Nikesh, we just very briefly dropped into negative territory on the NASDAQ 100, having been up at 1.2.4%. And the story this morning when I woke up was that NVIDIA's forecast, its print, was soothing fears that we have about an AI market bubble. This might be the last chance I get for a while, so I'm going to do it. Give me the Nikesh Arora call. Are we or are we not in an AI bubble?
Look, we are in an exuberant phase of AI. I think it is the fastest technology evolution we've seen in our lifetimes, and I don't think it's about to stop. You can see huge bets being made by almost everybody. And I think there is a lot of promise. You are seeing the consumer case. I think we underestimate how much the entire consumer landscape is changing and is going to change in the next 24 months. The idea of having applications where we have to go do all the work ourselves is going to become arcane. You'll have agents that'll go book your Uber. We'll go get you your food from DoorDash. We'll book your airline ticket. We can all imagine a future like that. We all want a future like that. That's going to require significant amounts of compute at the edge. So I think from an infrastructure perspective, in history, we've never had a situation where we built infrastructure, it didn't get consumed, and we wanted more. So I don't think the infrastructure problem is a real problem. Whether the demand comes right away or it comes a year or two later, I think that time will tell. But from a demand, from a technology fit, we're there. From an AI perspective, enterprises are slightly lagging that consumer adoption, but I think they're actually working hard to get there. Every time we do some AI experimentation internally, we come back and say, wow, that is cool. I wish we could deploy that faster across the entire enterprise. So I think the demand's going to come. The timing is up to you guys. You guys follow that on a daily basis. We don't. We put our heads down and see, where am I going to be 3 to 5 years from now? How do I position Palo Alto Network in that context? And are we going to plot our way there? And we think that AI opportunity is going to create explosive opportunity for almost every technology subsector and even cybersecurity.